Welcome back to Let's Talk Tax. I'm TJ Sponsel, and we're kicking off Season 3 by taking a step back after tax season to talk about what it revealed for CPA firms and their clients. Joining us today is Dave McGuire. Welcome, Dave.
Thank you.
Well, Dave, we completed another tax season. Next month marks 21 years of working together. So looking back, we have a lot of war stories we can share, but probably need to focus more on some planning opportunities for our alliance firms and their clients.
Yeah, well, thanks for dating us. Getting a little old.
Well, it's funny. We 21 years is a long time, but it feels like it's been a long time. But then there's been so much covered in such a short amount of time that it's just a very interesting time of review and reflection for what we've accomplished, but more importantly, how we've positioned ourselves to the CPA industry and their clients.
I think it's a good time to review, and you sit there and go, okay, it's 21 years is one of those times where you can sit there and go, okay, I've got a lot in my rearview mirror, but I still have a lot in front of me. And I think that's kind of where we're at with tax season right now. We kind of went through tax season. We saw all this stuff, but what's still in front of us that we can be thinking about today?
Sure. So whenever I think of April 15th, for some reason, this sticks with me, Dave, is that there was when we were back in 2005 and 6 and 7, we were working with a firm up in Michigan, and we still work with them to this day. They had a sign in their conference room that said April 15th is a lousy time to come up with a new tax idea. And that sticks with me. So now, that's kind of the point of our talk today is what did we learn from tax season? Maybe what did we miss from tax season? How can we use that awareness and that knowledge to help implement some strategies for the 9/15 and 10/15 filing season? So obviously we've got QPP that came out of one big beautiful bill. We have other things, we have 174 corrections that are taking place still up and through obviously to the middle of summer. What are some of the things that really stick out in your mind that CPAs and their clients should be looking for now that we're after April 15th? We've probably got some rest from April 15th, and the calendar turns to May and June and July. What should firms be focusing on?
Well, I think you hit two of the big things. The QPP came out. Obviously, that was under notice. We finally got a notice on it. Not that people like to hear me say numbers and letters, but notice 2026-16 came out. And we've got that gives us some guidelines as to what qualifies. We've also got the 174 change that people are still working through. Now, we look at both of those, and those are critical to get right now. And if you miss them on your 2025 return, you might need to think about opening it back up and amending it relatively quickly to make sure you can get all those opportunities in and fix those correctly. Because neither one of those are typically, when people talk to me, I'm talking about depreciation. We got 3115s, other things. Both of those are things that we need to deal with on the 2025 return. So I think those are two of the things. But I think we also need to look at what we learned in 2025 during the we say 2025, 2026 calendar year, 2025 tax year, however we want to refer to it. But we need to look at those things that we learned. What did we learn about our clients? When we're sitting down, are they expanding? Are they pulling back? Are they in a situation where income's going to be higher in 2026 than it was in 2025? These are all conversations we know today that we might not have known 6 months ago. So how does that change our tax planning? Do we sit there and go, look, we filed the 2025 return, but we didn't maximize depreciation deductions. Can we still open it up and amend and pull a 3115 forward? Because 2026 might be a pullback. Or are we sitting there going, no, they're in expansion mode. They're planning a new manufacturing operation in 2026. Should we be talking about property tax abatements? Should we be talking about this new qualified production property? What are the things we need to be talking about today to make sure they maximize their deductions and their credits on their 2026 return?
Well, I think that brings another point, Dave. I think sometimes there's, what was 20 years ago was 2 service lines of cost segregation and just R&D. Now we do 14 different things, I think, as a firm. And some of those service lines a CPA may have not brought to their client before. I think of the importance of a transfer pricing study. I think of obviously filing the appropriate 5471 or 5472. Can you kind of explain how we work with CPAs in educating their clients on the importance and whether it's a compliance issue or maybe it's more of a tax savings opportunity, how we support our firms in bringing these opportunities to their clients?
I think those are important areas that you just mentioned. Is 5 years ago, we would see a lot of the firms that we work with walking away from a client because they picked up an international issue. Maybe they opened up an operation in Canada, or they have a manufacturing operation in China, or they've got something going on in Europe. And they would go, look, I can't handle it anymore. Instead, now we have the opportunity to help them maintain that client, open up those conversations. What's the risk that they have without filing that transfer pricing study? What's the risk of them incorrectly filing the forms on the international level? But it's more than just that. For years, CPA firms have walked away from one of the biggest areas of taxation, which is property tax, and they've left it to somebody else. Now, they might handle the compliance, but they're not sitting there trying to manage it. They're just going, look, I get a form every year, says you owe this amount in property tax, and you pay it. Is that accurate? And right now, these are areas that we can work with CPA firms to make sure that they can come in with that consulting mindset that they have in other areas of their business and make sure they're helping people grow. Make sure they're not losing money, leaving money on the table, and just paying bills they don't need to pay.
Sure. Well, the property tax thing, that's something we've been doing for a few years now. And Matthew Barnhill down our Dallas office does a great job of leading that practice. And it is something that our real goal is to be able to look at the situation and then advise the client on the savings. Ultimately, the client goes, why wouldn't I do this? But just like everything, the challenge there is the timing, because these these appeal windows, which are vary state to state, they're pretty finite. Some expire at the end of April. Some are open just the month of May. Some are open from June to July 15th. And so really timing is critical. My point is, I think we as an industry, we get so inundated with just what's on our daily plate. Sometimes we lose track of, if we don't bring this opportunity now, it may be another year before the client can actually realize any tax savings.
And I think that's something we need to really think about and really change the kind of the dynamic of how people talk about it. We've seen that change in the CPA industry over the last 20 years that we've been working in it, where we've seen that people are starting to get out from behind their desk during tax season and go meet with their clients and consult with them. But we've also seen the change from tax season being a end of January to April 15th timeline to tax season's now an annual thing. And we really need to look at that tax planning, that tax opportunity. Where are the ways that we can save money? And we don't walk away from it on April 15th. If anything, we dive back into it on April 16th. We dive back into where are the opportunities that maybe we missed out on last year, or maybe they haven't missed out on them yet. Just because you filed a return doesn't mean we can't open that return back up. Doesn't mean we can't look at it. Doesn't mean we can't pull something forward. Doesn't mean we've walked away from the property tax. Now, we'll say property tax is probably that one area where if you miss that window, kind of out of luck for another year.
Sure.
And so I think that's a critical one that we need to look at, but we want to almost take this time and reassess and go, okay, what did we do? And we do it as a firm. I know we're sitting down we have our annual retreat right after April 15th. And some of the things that we do is we go through and go, what did we do well? What can we do better? And how do we make sure that we're working for our clients in the best way possible? And it's a great time to reassess as a CPA firm and do the same thing.
Well, I think, speaking of urgency, another thing that pops in my head is our location advisory practice. For those who aren't aware of that, our location advisory practice is driven by bringing state and local tax incentives to companies based on their growth, whether it's jobs, property, plant, equipment, et cetera. And that is something that's very time sensitive, because ultimately, be able to unlock that value in the form of incentives, we've got to do everything before there's shovels in the ground, before permits, before decisions are made of when they're going to start building. And overall, if you look at a client that's investing $20 million in a facility, state and local incentives should be around 10% of that, or $2 million. That's real money. That's free equity for a company. And sometimes they make those decisions unbeknownst to these opportunities to recoup that, whether it's training grants or edge credits or property tax abatements or sometimes utility exemptions. There's all kinds of incentives that are packaged to support growth in businesses. But once they've put the shovel in the ground, all their leverage is lost.
I think that's a great point. This is a good time to reassess. When we were sitting in tax season, were we having those conversations with our clients? Are they in expansion mode? Are they pulling back? Because if they're in expansion mode, we've got to think about those location advisory. We've got to think about the qualified production property. Where are the areas? Are they expanding overseas? Are they reshoring things that we've got to think about the international implications of bringing something from Canada back to the U.S.? What states do they set up in? Right now with 174, some states are adopting the new federal position. Other states are really still requiring you to amortize.
Yep.
How do these different things interplay that maybe the taxpayer doesn't know about, that There might be a difference between putting a facility in Michigan, Ohio, Indiana, Florida versus Texas versus California. How do we make those big decisions? But let's say the opposite's true. Let's say they're in a pullback mode and they go, you know what, guys? We had a really good 24, 25. We're going to pull back in 26. That could create some property tax opportunities. Maybe they're not making as much income in 26. Well, maybe their facilities aren't worth as much on an income base. So we need to really have that conversation, then tax plan around that. We see other things going on this year. We see expiring provisions. Energy credits are going away. So if you're in an expansion mode and you've considered putting solar panels on, are they having the conversation? What does that look like in terms of timing? And how do I absorb these credits that maybe allow me to put solar panels on, but I'm going to potentially have one last kind of bite at the apple before they go away based on the changes under the One Big Beautiful Bill Act. So it's a critical timing measure right now to sit down and have those conversations with our clients to make sure they're not leaving.
Sure. Well, one area that I think that I do want to touch on, just it's because it is something we talk about a lot, is 179D.
Mm-hmm.
Obviously, it's set to sunset here coming up for in middle of 2026. Could you give everybody kind of an update on what that is, and maybe speculate a little bit on what the future holds for that?
So 179D it's been around for a while. 179D has been around since the Bush administration in one form or another. It started out at $1.80 a square foot, went down to $1, index for inflation up to $5. And it was an incentive to build energy efficient buildings. When you own the building, it's a deduction against basis. So $5, let's forget about the index for inflation on a 200,000 square foot building. That's an extra $1 million in deductions. But really where it really hit home is for designers of energy efficient buildings owned by tax exempt entities or governments, because they could transfer the deduction back to the person responsible for the design. So if you're an architecture firm and you design a new 300,000 square foot high school that meets the requirements for $5 a square foot, they could transfer a $1.5 million deduction back to you. It's phasing out under the One Big Beautiful Bill. The One Big Beautiful Bill has an expiration date where they say any property where construction starts after June 30th of 2026 no longer qualifies. That's going to be critical this year to make sure you're getting those deductions, and possibly even into 2027, because a 300,000 square foot high school doesn't get built overnight. So you might see some properties even in 26 and 27, maybe even a few trickle into 28. But in reality, people need to start planning for this going away. So if you're an architecture firm or an engineering firm that hasn't had to pay tax in the last 5 or 6 years because they've been getting these transfer deductions, they might need to change their tax planning to adjust for the new reality. Now, there's some questions as to whether or not we'll see an extenders or anything else. I think based on the current administration, I don't see that happening soon, but stranger things have happened. And depending on what happens in midterms, there may be some negotiations. If Democrats win more power in midterms, we'll have to wait and see. Assuming that Congress and the Senate stays the way it is and the presidency, I don't see that changing anytime soon, because it is, even though it originally happened under a Republican administration, it is something where a lot of Republican think tanks like the Heritage Foundation and other things have come out against it, specifically calling it out in some of their policy decisions. So we'll have to wait and see where this really, how it comes across the finish line.
Sure. Sitting here now at the after tax season, start of the summer season, what are one thing, I was going to maybe ask this question for you and I, what is one common thing that you see CPAs overlook in bringing tax planning opportunities to their clients?
It's not necessarily one thing they overlook. I think what happens is we all get so busy, and this isn't throwing CPAs under the bus because we do it too, is that sometimes you can't see the forest for the trees. You're looking at what's right in front of you, and you're in tax season. You got a deadline coming up. So you're not necessarily looking for the tax planning things. You're looking to how to get through all these returns I have to do. And a lot of these conversations that we've talked about where people save money is in the consulting that requires sitting down and having conversations. What are you planning on doing in the future? What have you done in the past? How do we put these together to really look for the best tax planning opportunity? And I think that really, the dynamic firms are doing that. And they sit down and they become an advisor. With the advent of AI, with the advent of automation, filling out the tax return isn't what people are paying for anymore. What people are paying for, it's the knowledge that the accountants have in their head. And so how do we make sure we're pulling that knowledge out and providing it and not just being somebody that fills out a form?
Yeah, I completely agree, Dave. I think probably how I would answer that question is I think dynamic firms are more deliberate in terms of seeking the best counsel, whether that's internal or external of their organization, whether they're using a BDO alliance or a firm like ours. They're going out. I think of international, for example. Since we launched that practice in 2020, a lot of firms still kind of treat that as an unknown, and they're very lackadaisical about it. They have one person in their office that maybe does that, and they're just kind of heavily reliant on that person, and that person has no support mechanism. I think where we're seeing a lot of traction with a lot of our leading, when I say top 200, top 300 firms, is that they're much more deliberate about going out and using a BDO to help them solve their clients' problems and getting good counsel. And they're not fearful of bringing in an outside party to bring them the best possible solutions. And I think that's where I see a lot of opportunity for local firms and regional firms to provide more advisory, more consultative services to their clients, is making themselves aware, educating themselves to say, okay, what's the best counsel for my client? Whether it's securing additional tax benefits or reducing exposure in the event of IRS audits. And so I think that's one thing as my closing point I wanted to make is just how we've positioned ourselves to those firms as a technical resource.
I would agree completely. I think for years, some of these areas have been pushed aside because they're hard. We don't know how to deal with it. We saw that with R&D. We saw that with cost seg when we were early in our careers, is that cost seg was seen as, look, I know carpet's personal property. I'm just going to move the carpet and be done with it. And so people said, I'm doing it, but they're only scratching the surface. We saw that on R&D where they were taking the low-hanging fruit and they were getting an R&D credit, but it was nowhere near what it was maximized. Now we see that on international where maybe they're doing some stuff, but they can't get to everything because it's just too difficult. So we can provide that opportunity. We see that on property tax where, we're filling out the forms. Maybe we're writing some assets off, but we don't know how to go in and all these different areas. It's because sometimes they're hard and we need to pull somebody else in, but it's critical to make sure that we're not overpaying in our taxes, that we're looking at each one of these different areas.
Well, Dave, thank you for joining me today, and I look forward to another exciting summer season and extension season.
Oh, well, we're just happy tax season's over.
Thank you, everybody.